The fallout of the Gamestonks fiasco has only just begun, and it's become painfully clear to me that the Justice Department is more concerned about individuals who were able to generate wealth during the short squeeze of GameStop than the corporations that prevented it, that actively worked against them, that colluded to protect hedge funds. It's extraordinarily frustrating, but not unpredictable. The little guy, the system is, of course, set up to make it nearly impossible for the little guy to play the same game, in particular in investments. And Robinhood proved against their whole we democratize trading that they're just one of the big guys too, willing to defend the hedge funds when they need to. I've long canceled my subscription or my membership at Robinhood, moving my stocks to trade zero. But before we get into this story, huge shout out to this video sponsor, BitLevix. Huge shout out to this video's sponsor, BitLevix. Look, the crypto market is booming with Bitcoin prices already hitting an all-time high at almost $35,000. Current stimulus checks and other government expenditures lead to enormous increases in money supply and depreciation of the US dollar. More and more people tend to store their value exactly in Bitcoin. You can speculate on Bitcoin price by trading Bitcoin options with leverage on BitLevix. Options are very volatile investment tools that allow you to create huge profits in a matter of minutes. With minimum investment of just $20 US in a single option, you can create option portfolios, hedge the risks, and guarantee a profit for yourself. You just register, top up your balance with one of your available payment methods. Now you can trade Bitcoin options. All other parameters are reflected in the option price. By customizing them, you control the level of risk and all other factors. Earn big on every big Bitcoin price swing. Trusted and licensed businesses available worldwide. Register on BitLevix by following the link in the description and start earning now. Now, this article over on the shell of a website, Kotaku, saying even the Justice Department is looking into the GameStop stock fiasco. While the dust starts to settle around GameStop's meme stock phenomenon, investigations into hedge funds, trading platforms, and the Reddit community that fueled it are just getting started. Many people have already lost a lot of money, but even more could be on the line if lawmakers and regulatory agencies discover actual laws were broken. Yesterday, the Wall Street Journal reported that the Justice Department's fraud section and the San Francisco United States Attorney's Office were both seeking information from brokers and social media companies that were hubs for the trading frenzy. In theory, any cases that arise from these probes would be criminal, which would be harder for regulators to prove, but also carry heavier burdens for any potential wrongdoing. But as the Wall Street Journal reports, the Commodity Futures Trading Commission and SEC are also looking into what happened with GameStop. As civil regulators, they could end up fining some of the traders or companies involved. Massachusetts securities regulators are also reportedly involved, with the Office of the Secretary and the Commonwealth subpoenaing Reddit trader Dia V, aka former insurance marketer, to testify at a state hearing later in the month. All of this comes as Congress prepares to hold its own hearings of how people like Gil and others at Wall Street Bet subreddit managed to take advantage of big bets placed by hedge funds and commission-free trading apps like Robinhood to pump the GameStop stock from the low double digits early in January to over $400 a share, the height of the meme stock bubble. This is so sickening. Oh, this is so sickening. They're literally like, whoa, we need to look at how the everyday Joe was able to make money. We really need to look into this. This is absolutely absurd. Maxine Waters, the chairwoman for the House Financial Services Committee, previously requested Gil also attend the House hearing on GameStop scheduled to take place on February 18th. Why him? Why is he the one? Why don't you look at the hedge funds and all these other scumbags making hundreds of millions of dollars? Yesterday, the New York Times reported that Reddit executive Steve Huffman would also be testifying at the hearing. A representative of Citadel, one of the hedge funds at the center of the trading, is also expected to attend, in addition to possible appearance by its founder and CEO, billionaire Kenneth C. Griffin. In addition to Citadel Melvin Capital, a hedge fund that bet big shorting GameStop and other companies and lost billions in the process, Citadel's sister firm, Citadel Securities, which is also founded, is one of the market makers responsible for executing a large portion of the stock trades people make on platforms like Robinhood. Shocking! Waters also previously suggested calling a representative of Melvin and Robinhood co-founder and CEO Vlad Tenev to attend the hearing as well. By the way, nothing will happen. See, guys like Deep Value, they don't have experienced legal teams. They don't have billions of dollars to pay lawyers to put them up on stand to say nothing. This is going to be just like when everybody, including myself, was retweeting the total pwns that Ted Cruz would put out there with Silicon Valley people like Jack Dorsey or Mark Zuckerberg. That ended up doing nothing. It literally did nothing. Twitter, Ted Cruz got a lot of retweets and built a lot of fame, but ultimately Washington did nothing. Silicon Valley went on to ban the literal sitting president of the United States and continue to pressure people who don't fit the mainstream narrative while colluding with their Silicon Valley partners to shut down any competition, a la Parler. Robinhood came under fire from angry users and a number of members of Congress when it halted trading of GameStop and other meme stocks on its platform, which it later said it did because it didn't have enough money on hand to cover trades users were making on an extremely volatile stock. The clampdown on trading was followed by a number of severe drop-offs in the value of GameStop's inflated stock price and ultimately followed by its relative collapse. It's currently at $50, which is both much higher than a year ago, but much lower than its peak. Because of Citadel's connection to Robinhood and hedge funds shorting GameStop stock and Robinhood's halt of GameStop trading, there are many questions around the timing of events. Are you joking? There is no question from people who aren't out here trying to put on a show. This was all these scumbags working together to stop the retail traders. That's exactly what happened. And even... why didn't GameStop sell some of its own inflated stock during the bubble? The retailer could possibly arrange a stock for cash infusion in the future. Well, the U.S. regulations reportedly prevented GameStop from cashing in on the share surge. Why? Why? Would that have hurt the hedge funds? GameStop could have paid off hundreds of millions of dollars in debt by capitalizing on the short squeeze of its own shares, but the U.S. regulation restricted it from doing so. That's according to a source close to the matter speaking to Reuters. It had even registered with the U.S. Securities and Exchange Commission in December to sell $100 million worth of its stock, but decided not to exercise this option. GameStop reportedly decided that the financial regulation prevented the company from selling shares because it had not informed investors of its latest earnings. The SEC mandates that the company should release such information when selling stocks, but GameStop results for its latest quarter, which ends in January, had not been recorded. Well, okay, so that makes sense why. The boost of a well-timed stock sale could have helped GameStop recover from its ongoing struggles, with the most recent financial results 3 months ending in October 31st showing the retailer posted a $19 million loss. That said, this was an improvement on the $83 million loss recorded in the same quarter the year before. Well, now we know that they had plenty of help with the modern console sales, but ultimately there was some red tape that meant GameStop couldn't cash in on this. But beyond that, the government is concerned about bringing up an individual and retail traders, putting them on trial in front of Congress, because at worst, they did their homework and they played the same game on the same playing field as these super huge mega hedge funds. That's the worst that they did. But we got to worry about the individual retail traders. They're the problem, not the companies like Robinhood that shut down trading that made the stock collapse. Not like the incestual relationship between Citadel and Melvin Capital and Robinhood. Definitely not that. We've got to keep the system in place. We've got to preserve the status quo. Otherwise, we'd have plebs getting rich, and that can't be happening. I sincerely hope that This opens a lot of people's eyes. If you haven't yet, by the way, if you're just watching this video and you haven't yet subscribed, I hope today will be the day. Earn that subscription. There's a little red button down below. I hope that you'll click it. I hope you enjoyed this video. We'll talk to you again real soon.